Hey everybody, sound check. This night I set up just the first couple months, just right away, with people who subscribe to the letter to say, hey, let's get together and talk about how you can use it the best, any questions, go over some of the calls, that type of thing. And I decided, hey, almost maybe not the first time, but the second or third time, I said, hey, why not just invite everybody? It's not any top secret stuff. We're talking about the past mostly. And you know me, once I get talking, I start talking about other stuff. So it's been an enjoyable night for most people. So that's what tonight is all about. It's actually officially the market letter review day for subscribers, but everyone gets invited. But the first goal is going to be to kind of review the letter a little bit and just kind of make sure people who are getting it are using it to the fullest benefit. And some of you, did you guys get? You guys got a couple of educational emails from DTS right this week. Did you get those? Yes, true. Like them, good stuff. I yeah, 2 in 2 days, right? Yeah, I try and I probably was a little while since I sent the last one. I try to keep some stuff flowing, and the goal is very simple. There are, first of all, just so you understand, there's some different, lists, if you will. There's the general email list. There's people that get emails and what they really get are invitations to sign up to become a member to attend these events. There's a lot of people that every week they make the decision. I don't know what the big decision is, but they decide to become members. And then there's a big member list. That's a fairly big list of people who are members, and that's you guys who attend all the free stuff, get invites automatically, and all that kind of thing. And to that list, all of you folks that are here, um, well, obviously there's a lot more of you than show up every week. To that list, I try to keep a good flow of some educational stuff going to you because I know a good majority of you are in the position that you either a you are looking to get into the market more in the future, either long term or short term or both, but you're tied up now, you need more funds, you're busy, you're working. Maybe you tried it in the past, it didn't work out so well, but you still have an interest. I know there's a lot of you in that category. I know there's some in the category that you took some kind of education somewhere, but you're not doing all that hot with it. You're still trying to learn more. So I try and keep the flow of stuff going. I think it's good supplemental education for the people who do subscribe to stuff with me. And also, if you don't, I think it's good educational stuff to, keep continuing to try and learn. I know a lot of you are trying to learn on your own, and that's fine. And I think it's good educational stuff to continue to do that. And of course, while I give out an awful lot of free information, the thing that I hold back are the actual stuff that I teach in the seminar program, which is what I think people who are serious about learning to either day trade or long-term invest need to take at some point. So that's why you get those educational emails. You got a couple. I sent another one out, but I think that last one, oh, thanks, F. Um, the last one I sent out, I just see there's another group then too, which is the room members. And sometimes I send them a couple times a week. They always get some educational stuff. And I sent another one yesterday, but I think that went only to them. Um, but it was a good one. It was along the same lines about that management you had, the management one that I sent to all of you, and it was about um, how important it is sometimes to know what not to trade. It was a little article about a non-trade rather than a trade, something that I knew was not good odds, and it wasn't so much the point was not bragging that I knew that it wasn't good odds. The point was that even if it would have worked for the person who suggested it, that wouldn't change my mind about what the play is. In other words, you don't go back and change your mind at the end of the day because something worked or didn't work. Over a long period of time, you educate yourself and you may change your mind about something. I do that all the time. But you don't on any single play say, oh, gee, I thought that was a short, it's a long, from now on I'll go long. That's not what you do. The majority of stuff that you look at is not a short or a long. It's just crap. Most of the stuff you look at on your chart on the screen is just crap. It used to kill me when somebody would ask me a question and they'd ask me if this is a good short, and I'd say no, it's a terrible short. And they'd say, oh, you're going to go long? I'm like, well, no, it's not a short, it's not a long. Just because it's not a short, it doesn't mean it's a long. It's crap. Like most of the stuff people, I mean, everybody, me, I'm not saying you guys, anyone who pulls up a random chart is not likely any kind of tradable pattern. That's what we have to look for. So, anyways, there's that whole little house cleaning thing. How do you like this environment right now we're in? Give me some comments. How do you like the environment we're in? The market environment, the market situation. either intraday or long term. What do you think about it? Well, you should never be nervous. Nervous only comes from not knowing. Let me make this point too. We may talk more about drunk than about the market letter review, but no, I will get to that. But there is a huge difference between day trading and long-term trading. I love this environment for day trading. I love this environment for day trading. Sloppy, back and forth. You look, you look, you look short when the market drops. You look long. I love that stuff. I mean, I love it. What I actually hate as a day trader, is when we're just flying in one direction or the other so fast, so furious that you're afraid to jump in anything because everything's so extended and overcooked. That's what I don't like. Tony has been up, down, and oh, day. Well, I'm talking about intraday right now. I'm just saying that day trading, I love this environment. I'm not saying you have to. I'm not saying everybody does. I'm I'm uncomfortable in some environments where other people may like, and that's why sometimes at the end of the day, you see people chat and they say, "Oh, what a great day," and somebody else says, "What a crappy day." Well, it all depends what you look and what you like and what you look for. If you thought it was a bearish day and the day fell, well, then you did great. So it just depends a lot on what your expectations are. But I like 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 the Seinfeld episode with Kramer. Loves the slop, loves the slop. I love the slop as a day trader. That's what I love. Variety of stuff. Strong sticks out when the market's weak. Weak sticks out when the market's strong. As a matter of fact, today I really didn't want to do anything after 11 o'clock, and there are two or three things I could not stand the thought of not doing because they were just so nice. So I love the day trading like this. What's that? I only see the first slide. Yes, you should be seeing market letter review. I'm just talking, Ains. I'm just blabbing away here. Sorry, you got to put up with that if you don't know me. So so as a day trader, I like it. As a long-term trader, and that's something we're going to talk about today, this is a difficult area. Now, let me say something else. I hate it when other people in this industry, and I'm talking about people that are on news networks, I'm talking about people that are well known, I'm talking about people that aren't well known, I'm talking about other people that do what I do. When they come on and they give you a market opinion and they're saying absolutely nothing. They come on and they're just saying, you ever heard somebody talk like this? Here's some live charts. Well, I don't know what ear candy means, but it probably sounds like the right term. Like in analyzing the market. Well, when we come up to this area here, we'll have to see if the selling comes in, and if the bears come up to the plate and they really sell things hard, well, then we'll probably see the market pull back, and if the bulls don't buy it, we'll probably fall. You know what I mean? Just stuff like that. You get done listening to it for a half hour, and all they pretty much say is, well, if the market goes higher, it goes higher. If it goes lower, it goes lower, and that drives me nuts. And I make it a point to say this not to brag, but to keep myself mentally in check that I don't do that. Now, while I'm saying I don't do that, yeah, wishy-washy beyond belief. Like literally, sometimes you can listen to somebody talk for a half hour and you don't know what they said. And you know what too is they'll never be wrong. They'll never be wrong because they'll say, "Well, I told you that if the bears react to that area, we'd sell off, and we did." And I told you if the bears can't hold that area, we'd go higher, and we did. It's just stupid talk. You can't follow a thing. But what I do want to point out, because right now I'm in this situation, I'm always very definitive. And those of you that know me, I'm going to go over a chart in a minute here of what I have called in the past, and I'm very definitive about. There's no wishy-washy. If I'm wrong, I'm wrong, and I don't take down videos from the website if I'm wrong. Whatever it is, it is. But there's also, there's a time to be bullish, there's a time to be bearish, but there is a third time that can happen. And that is, there is a time where you can say, I don't know. And there's a big difference between being wishy-washy and saying, I don't know. There's some people that step up all the time and they're constantly wishy-washy. Well, I'm very definitive, but once in a while, I got to sit back and say, okay, you know what? I gotta sit back and wait a minute. I can't tell you today. I got to see some more information. And that is a definitive call to say, I want to sit back and wait a little bit. And what I want to get into today a little bit is just that we are in a tricky area. I'm going to show you why. And it is the first time I said this in 3 years, just to put it in perspective for you. It was 2016 where we had that kind of a wide sideways pattern where it's a little trickier. But other than that, there's been no time where it's been, indecisive in the long-term pattern. So as a day trader, every day is different. As a day trader, every day you're long, you're short, you're back and forth. There's individual stocks. As a day trader, every day you can find unique things that don't even care about the market. Like what was one today? Like UNP today. UNP was one of the ones I could not stand the thought of not doing today. Here's UNP. Um, there's a 15-minute chart. This pullback in UNP. There's just stuff that's unique, and that's what's nice. But as you get bigger in time frames, you get less and less unique stuff. Now there are some sectors that are always unique, but it just means they're different from the market. You don't often get a stock that is so unique it just goes on its own page for weeks. That doesn't happen usually. It can. I remember it did with Microsoft. I remember it did with Wells Fargo, but it's much rarer. As a day trader, we see it almost every day. So with that, let me kind of begin what we're supposed to do here. I was going to cut this short today, and I'm probably going to end up running long because, as I said, I'm feeling just a hair under the weather there. But so, quick topics. I'm going to run through a letter real quick, show you some concepts on there. Bias plus confirmation. Again, I'm assuming a lot of you've never heard me talk before, so yeah, it always looks like stage three though, Tony. So you have to be careful. Monthly, I mean, a lot of patterns always look like stage three, and there's a balancing act between not fighting the trend and calling everything a stage three, and it makes it tough. That's why even back in 2016, I was bullish, even though that was stage three looking by most the stuff we would look at. But anyways, um, remember well, I'll get to when we look at these letters, but bias plus confirmation, I'll explain that. QQQ versus the SPY. I tend to feature the QQQ charts. It doesn't matter which you look at. I'm not. I don't necessarily favor the QQQ over the SPY. The QQQ, for those that are a little bit newer, is the ETF, which is it's an abbreviated package put together by brokers that represents the Nasdaq 100. It trades tick for tick with all the stocks in the Nasdaq 100. It actually is the Nasdaq 100. The SPY is the S&P 500. And these are what I look at for all my market analysis, the combination of these two together on a daily basis. And it doesn't really matter which one you look at. The point is that when they're doing the same thing, you get more consistent pattern. If they're doing a little bit different thing, you get a little sloppier patterns. I look at the QQQ because most of the time it will lead in the important times that I want it to. So I tend to look at that first or feature those charts, but I'm always looking at both. Now, on a bigger picture, I also look at a couple other things, but I don't look at them like every day. Like I'll look at the Russell, which is a small cap index, and I look at different sectors most nights and get a sense for all that. If you want a good discussion of some of that stuff, there are some videos on the website called a bookmark on the market, and I haven't done one of those in a little while. I'm due for one. I'm going to be doing one in the next month sometime. But the last bookmark on the market discusses some of those topics if you want a good educational concept of some things that I look at when discussing the market. And that, of course, if you're new again, you would find that on the free stuff page on the DTS website, which would be right here. So most of the charts you'll see in the letter here feature the QQQ, but it doesn't really matter. The only thing you shouldn't do is do not look at the Dow. That's all they talk about on the news. There's a reason for that, but the Dow is 30 stocks. It's not what you should base your research on. It's silly to do that. So we will take a look at the last couple of weeks actually today. I didn't go back all that far and then review some couple of intraday things. We'll take a look at some of this stuff. Purpose of the meeting. Well, number one, quite honestly, is to show you how incredible technical analysis is. It is. Technical analysis is the only way to understand and to trade and make money in the market, day trading or long term, period. I know some of you don't believe me on that. That's fine. If you hang around long enough, you will eventually. You can get tricked into thinking other things work, like news and fundamentals in the economy, because sometimes things do line up, and coincidentally, you look at something that had good news and it went up, and you say, wow, but you'll never make money long term doing that. The test for somebody, is not, did you make money 1 week or 2 weeks or over the last month as a long-term trader? It's consistent over a long period of time through different environments. What tools do you need? What tools do you use to survive through bear market, bull market, big day up, big day down. How do you get through all that? Anybody can have a streak when you have a one-track mind and the market agrees with how you think. The greatest example of that were all the genius day traders we had in 1999. 97% of them bit the dust over the next year, right? So technical analysis is incredible, but very few people just really don't get it. All the time I see people emailing me, this didn't work, that didn't work, this didn't work, that didn't work. No, it all worked. I want to say back to them, you didn't work, but the charts worked just fine. Charts give you great odds. And something you're going to hear me talk more and more about is where technical analysis stops. Maybe this will be one of the things I'll talk about Saturday. Yeah, it is. Let me jot that down. I'm going to talk about that Saturday a little bit. Is that where technical analysis stops and math and probabilities take over. And you may not know what I mean by that, but I'll talk about it more on Saturday. To me, it's becoming just a bigger topic because a lot of people, they have a pretty good technical knowledge, and if something doesn't work, they try and keep refining the technical analysis rather than perfect the next step, which is what you do with that technical analysis. And what I mean by that is technical analysis only gives us odds. And you can't, I mean, the more you know charts, the better the odds you'll have, but there's a limit. I mean, you're never going to have 100% odds looking at charts, and I can't make up the number. I don't know what the number is that you get, and I don't know what it even means to say it, but say you have 70% odds. I don't know what that means. But you get odds in your favor, but then you have to do something with those odds, and that's where a lot of people goof it up. And then when they goof it up, they think, well, let me study charts better, and they get it up to 75% odds. But then they still goof up what they do with their technical knowledge. I'm not sure if that makes sense to you, but it's that next step that I think is part of what I'm going to talk about a lot in the future. I've talked about in the past in terms like a moment in time, math and probabilities. To me, this is at some point becomes the biggest part of trading, investing, same thing. And then I'll show you specifically how market letter works. All right, boom, 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 boom. This is a weekly chart of the QQQ. I want to just give you a little history because when I said to you a few minutes ago that right now I'm in a spot where I am not able to be real aggressive in long-term trading. And by long, back up for 1 minute, let me just define something else. I like to day trade. I like long-term trading. I personally do not swing trade. I don't try and use a daily chart to hold something for 2, 3, 4 days, whatever it is. I think that's an incredibly tough time frame. I don't mind holding overnight something I picked up intraday and call that hit and run swing trading. But then once I'm beyond that, I go to longer term, holding weeks at a minimum, kind of in the category to me mentally that I don't worry about it from day to day. That's where I like to be. So long term, this is long term trading here. I just want to show you. Let's back up to, and a lot of you have been with me for a while. And this is when I talk about these calls. These are all things that are done in the letters that I write. It's all documented. I'm not making up past tense. But I'm going to start up here. This was the November high, which I called and started shorting 2 days before we dropped. And of course, everybody thinks we dropped because there was news about tariffs or whatever, but that wasn't the case. And we had this drop, and this was a nice drop, made some nice money through here. Now, at right here, I want to be total fairness, I was not sure if this would be the low right here, or if we would come down to here. I did a thing or two long. I did not lose any money here. I did not lose any money. I had a couple things. I had something that worked, something that didn't work. And then we came down to here, and this is where this is the one that happened. This is the kind of the Christmas Eve low, and then January 2nd, January 3rd, I went all out bullish here, made some money on the way up here. Now this is what I want to talk about. This is where things got real tricky in here. This number 3 was a definite area. Now, if the bears were in town and if we were going to have a bearish market, this is where we would have rolled over. if we're going to have a sideways whipping market, we're going to go higher. So I did react to this here, but I made money. Now, probably saying, what do you mean by that? Well, I am very firm on the belief of not just trying to trade the market. What I like to do is use a market bias and then find great stock plays, and you have kind of what I call a buffer in there. So in other words, in here, I went short, something didn't work, and then I had a home run. So shorting the market wouldn't have worked, but I made money because I shorted stocks that net did work. Okay. So, and that's how you do this, and that's what I do. When I come into an area, I look for any little sign that we may roll. I get the right stocks to try and short it. And this is a definite area. I had no problem trying to short this in here. I felt very good about it. And I knew we weren't necessarily going to roll over here, but it was the perfect spot to do that. So made some money in there. That was great. Now from here to here, this is what was tricky. On the way up through here, my view was to be getting short as we came into this prior high. Again, net through here, as of this day right here, I was up a little bit. And then I made a lot of money coming down through here. And again, these were plays from the long-term trader. And I was set in here. If we would have dropped down to these prior lows, boy, I was killing it. Um, but we went to here. I took some profits on stuff. I put some trails on stuff. Ended up making some nice money, but then the rest of it trailed out through here. So I didn't, and these were all short trades, obviously. And so right now we come up back to here, and this is where it's really, really tricky right now. And I don't want, I'm not going to go tremendously into the reason why right now, but suffice it to say that this, when you go to new all-time highs, the novice intuitively thinks, okay, new highs, we're gonna fly. Everybody's gonna buy that. Well, that's not how it always works. New highs bring in two types of people. They bring in buyers, and what else do they bring in, everyone? What else do new highs bring in? The half the equation that the novice doesn't look at. Sellers. Sellers. Yeah, it can bring short coverage. Yeah, in every spot on the chart, Gabriel, there's people that have to buy. There's people that want to buy. There's people that have to sell. There's people that want to sell, right? But so when we go to a new all-time high, what determines if net will there be more buyers at the new high or sellers at the new high? What determines that, everyone? What determines who wins that battle? There's going to be an unusual number of buyers and an unusual number of sellers. What determines it? Supply and demand. And how do we read supply and demand? Well, yes, sentiment is a verbal admission of supply and demand in a sense. What determines it is the chart pattern going into the high. See, this is what people don't get. It depends the chart pattern going into the high. You need to be able to look at the chart and say, when we pop to these new highs, are there going to be are there going to be people who need to take profits, or are there going to be people who want to buy this to go higher? So net, to keep it simple, this is not going to go high. This is not going to go significantly far. Now, what's significant? We may go up another week or so. I don't know. I don't know. I have to, this is why I'm saying why it is difficult right now, because there will be no way to determine the top. It's going to be an awkward top. We're going to pop to a new high, and that's going to be a little peekaboo top. It's going to come in, and what happens from there is unclear. So I do want to get this top. I've already said to people in the letter, and I'll share this with you, that I am not playing this long, period. I'm not playing this long. In long term, again, understand, I'm not talking about day trading. I'm talking about long-term picture. I'm not playing this long. If we should happen to run for 3 or 4 weeks for some reason, I'll just be watching. I'll be perfectly fine with that. But I don't chase patterns. I don't play patterns against the odds. I think there's very high odds that we do not go high here. Much higher. Could this be the top already? I don't know. We'll talk about that in a minute. But and this is what I mean by I'm saying this is one of the rare times where I'm not being wishy-washy. I'm saying firmly, everywhere here, I was very firm what I was doing, 100% conviction. Right now, I'm telling you, I'm very firmly saying I'm not real sure. I'm not real sure where the top is. So how do I play that? Well, I'm poking at shorts every time we get a little bearish. I'm poking at shorts. Just kind of nibble on one here and there, and if we start moving down, great. One of the things, to me is a lot of people will say, well, why not just wait until we're clearly moving down? Well, here's the problem. That's what you hear. It's a novice type comment. It's easy to say that, but the problem is that's how people lose all the time. Let me show you a little. Let me show you something. If this were the pattern, yes, you must know the guy that's emailing me about gold. If this were the pattern here, right? Everybody would say short this, right? Everybody would say short this, right? Agreed? Everybody would say short that, short that, short that, right? No discussion. True, everyone? All those tops up there, right? Everybody would say short that. Everybody knows that. That's in the Cracker Jack book of Technical Analysis 101. Okay. And if we had a pattern something like this, everyone would probably say, oh, you know what? When you break across that high, you can go long if you want to, right? Everybody kind of knows that. That's Cracker Jack 102. Everybody knows that. Well, let me ask you something. What happens when this is the pattern? Is that is that uptrend or is that sideways? I know we're kind of moving up. But you see the difference that I'm talking about? See, this pattern does not support going higher. Yeah, right. So if you tried to buy all these breakouts, you're getting nailed. It's not necessarily a bearish wedge, Nancy. We can't determine that without knowing more about the chart. From what you have on the scale here is just a grinding upward. So, but you see, at what point? My point is, though, guys, at what point does sideways, where you short the top, become uptrend where you buy the breakout? And at what point is this a short or a long? You see, that's part of this whole issue that I'm getting at about when you break to a new high right here. Are you going to be moving higher or shorter? Does that ring any bells with anybody? Does that click with you at all? In other words, if you tried to buy this breakout, you'd get nailed all the time, right? Because this pattern will bring in selling at the new high, not buying. Does that make sense to anybody else? And even though it's not exactly like that, the the thought process, the balance of supply and demand, that's what's happening here. So it's a tricky letter. I had another thought I was on the way to getting, but I lost it. So there's the weekly chart. Now this right through here, I want to take. See this low right here. I now again remember I was short. I was short big time. I mean I went 5 positions short right at the top. They were doing fantastic. And had we dropped to here, I would have can't even say just would have been off the chart because I had all good entries on this stuff. Did well even here, but when we got to here, I was like, darn it, we're just not going to follow through on this, and I knew it. And that's why, as a long-term trader, I really don't want to like try and get too tight with stops. I want to give things room, but I knew this was going to come back to retest. How did I know that? Well, I want you to look right here at this bottom. See that bottom right there? All right, I'm going to flip down to a daily chart now. All right, go down to the daily chart. That bottom, yeah, we know that. That bottom there at 5 is this bottom right here. You follow that? So that's the June low. That's the June low. There is right there. So this bottom here, this is a weekly bar. That low is this low right here. So I have a question for you. I'm saying this is a very bullish daily chart. Why is it bullish? Identify a few things on here for me that are bullish. No, far from MA would not really be bullish per se. Okay, some basic stuff. Why is it bullish? Well, we're heading up, right? We're in an uptrend, okay? So therefore, moving averages pointing up, blah, 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 all that good stuff. So yeah, we're pointing up. And that's something, you could call your 5-year-old into the room and say, are we heading up or down? And they'd say we're heading up. That's good. But just because we're heading up doesn't mean we're going to keep going up, right? In other words, when we got to here, what made this especially bullish? In other words, what is it about this trend when I look at this, I go, you know what? We're not going to drop. Now, you don't know it here. But by the time we get up here somewhere, we're saying, you know what? I want you to just identify a couple of things here. Plowed through prior resistance. Okay. Well, I don't know if we plowed through it, Jagdish. I don't know if we plowed through it and we hit it. This is the first big area. We hit it and we stalled. So we didn't plow through it, but you're kind of on the clue though. The reaction to that area was fairly minimal, right? And you have some good stuff. Gordon, you're right on with one of it. Yeah, you guys have. Yeah, okay, good. Yeah, Gordon, you're on the money here with a lot of this stuff. First of all, this bottom is an extremely bullish bottom. This is an extremely bullish bottom. Why is it extremely bullish? Well, this is just good level technical stuff that is so reliable. This was the biggest bar on the chart on the way down, the biggest volume bar. We gapped up into it and we cleaned through it. That there is going to ignite a rally like you're not going to believe, right? And this is why, of course, I was short and I got my stops down on stuff. And luckily, I had stocks that didn't overreact. They were one of them never got all that weak. Four of them did well. At least I got some targets out of them and stuff. But I just knew that this was going to fly higher, and that's why I got stops down on my stuff. And it's a good thing I did because those positions, would have eventually stopped anyhow. So, protecting the profits and taking some targets was the right thing to do. I actually didn't cheat targets. I got real targets, and then I brought stops down on the rest. But that lift off the bottom, that's just super bullish. And then the fact that you gap, now somebody else mentioned this too, the fact that you gapped up and refuse to get any bearishness after that. In other words, all this buying, and yet the bears never are able to push things back, even on this vertical move. Another thing in here that I want you to notice that a lot of people don't even look at or consider is how red is reacted to. How is red reacted to? In other words, um, on the way down, when you have red, you can't overcome it, right? Red is like this big disease and you can't get over it and it pushes you lower, right? But on the way, if you're in a bullish pattern, I mean, even on a bullish pattern, you would expect that red would drive you back for a couple of days. But I want you to notice the reaction here to red. A red bar comes in, and the next day, a narrow bar, we don't go lower. In other words, that's all the bears can do. They can't even push down for a pullback that would still be bullish, but they can't even maintain a pullback. Does that make sense what I'm saying? In other words, they can't do anything. They can't even nudge the bulls back a little bit for a pullback. So you see red come in and we just go sideways, and then we negate the red. This is the only red bar of any size, and what happened after the red bar. See, what you always have to look to, what I always say is not what happens, but the reaction of what happens, okay? You don't react to a red bar despite popular belief. You react to the reaction to a red bar. Why? Because a red bar can form any day, anytime, for any reason, right? Trump can send out a tweet. Iran could say blah, 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 we don't like you. And, for one afternoon, the market goes goofy. And then cooler heads prevail in the next day. So it's the reaction to the event. So we have a big red bar. How do we react to it? We gapped up the next day and never sold off again. This is what's so bullish, is that when you have some bearishness, you immediately get buying back again, right? So what we have is a very, very bullish daily chart that is now running to a new high that I know is not going to get bought. What does that leave me with? Real question. What does that leave me with? Yeah, a mess, a mess. And again, first time in 3 years I'm saying this. Just kind of a mess. So I'm doing it by doing what I do. I'm saying I'm not going to go long here, period. Now, when I say I'm not, when I scan, sometimes I find unique stuff, just unique, like, wow, I'll do that. But it's not that often. And most of the time, my thing, my style is to try and find a possible market focal area that could be the high or could be low, and then hit the strong or weak stocks, depending on which way I'm playing, to kind of complement that area. So to me, the concept of going long, just think about this. The concept of going long, we're up 2 months in a row vertical. I can't go long after that. I don't care if we're breaking a new high or not. Why isn't it just bullish? Because of this weekly chart. That's over the head for right now, RR. Yeah, well, that's part of it, R. Yeah, I mean, just as simply fact, we're vertical for 2 months, and a lot of it goes into stuff that I don't want to go to right now because it's going to be you need some background to get it more. But just for simplicity, let's just say that we have 2 months of profits built up. Who's taking those profits? Nobody. How do I know? Look at the chart. And also, I can tell by a lot of other things. Now, it's not as clear though. Part of back, remember I told you back in a great video to listen to, RR and others, is go back and look at the last bookmark on the market. It's called number 3. I have 1, 2, and 3. Bookmark on market 3. I talk about a lot of stuff, and what I could see in here, back here on number 1, back here, was a lot of this is based on the lack of sector rotation. When sectors popped to new highs, they got whacked, and we're seeing that a little bit. Look at oil. Oil was strong. Oil getting whacked, and not just profit taking whacked. That's what you want to see if you're bullish. I mean, big money crunching it type of pullbacks. And yeah, the money's still popping around to other sectors, but those sectors are not really going up correspondingly. It's just it looks like things are getting whacked. Now it's a soft art reading that. There's no definitive things, but it was a big part of what I looked at before. And again, I'm not 100% sure right now. Right. In other words, as we hit this high, you can tell looking at the chart, there are more people that are going to want to take their money than there are going to be buying this. In other words, well, and I don't want this to come around the wrong way, but a head and shoulder pattern to me is not a pattern. It's not a strategy. It's not a concept. You have to define for me what you. In other words, any strategy that I do, that I teach, that I talk about, has many parts and facets to it, and it revolves around multiple time frames. You can't look at any chart and call it, the the baby blanket strategy or the dog poop strategy or anything else. I mean, you can't just do that on one time frame, looking at one thing based on something simple like a head and shoulders. It doesn't work. There's no such thing as a head and shoulders pattern. I know there is. I know people teach it. I'm just saying that there's no such thing. You can't make money doing that. So I don't know what a I know what a head and shoulders pattern is, but I don't know what it is because it's not defined properly. So this to my knowledge, a head and shoulders pattern. This wouldn't be a head and shoulders pattern based on, whatever you call it. But a head and shoulders pattern is untradeable anyhow. It's untradeable. If you're entering on a head and shoulders pattern, you're losing money all the time. Not all the time, but you'll never make money long term because those are terrible entries. You have to be smarter than that. You have to be smarter than saying that's a head and shoulders pattern. I don't know if that makes sense or not. So I don't know how to answer the question because it's not a defined pattern to me. It's just a name. It's like saying, gee, that's a toppy pattern. That's a pretty pattern. That pattern looks lower to me, and that's what it's like saying to me. It doesn't mean anything. I'm not sure that makes sense to you, but indexes are making higher highs, but majority of big stocks are under. Well, John, not necessarily per se, because that. See, what happens, John, is things move up. The big stocks move first. All the money comes into the big stocks, right? And then if the bulls are still there, if there's still money waiting to come in, everybody looks around and says these things are too high priced. People can start selling. So then the money filters down to smaller caps, and that's why typically, as a rule, pretty good rule, the IWM, the small cap index, lags on the way up and leads on the way down. Money filters to it last on the way up. Does it make sense? And then when things look toppy, the money comes out of it first because it's scared. So that's kind of what you're seeing in that case. It's not necessarily bearish if it's part of a good sector rotation, but you have to kind of measure, yeah, on the way up, yeah, but it typically leads on the way down. So you have to kind of measure, just what each of those sectors are doing, and if you think overall. And to me, one of the things is when you have a sector that pops to a new high and it immediately gets killed. And in other words, instead of going to a new high, instead of people saying, yeah, let's take some, let's run this up, let's get in, everybody's immediately selling when you get to that new high. And not just selling casually. I don't mean low profit, I mean getting whacked. And that's what you have to look at, really, is to really kind of dig in and see what's happening a little bit. And naturally, when it's all said and done, all these things average together and become the market. And this is what we're looking at in the market. Again, a pattern that I don't think will sustain. But anyways, um, I'm going to move on from here. Um, I've kind of avoided a little bit the point of what we're doing today, and we can pick this up more on Saturday if you want. And why did I go over all this stuff? Well, I go over it because number one, I know a lot of you can't get the education now, and to some extent, I want to help if I can to that degree. But also, all this can change in 5 days. I mean, patterns can change. So, I mean, you can listen to me all you want right now, but 6 days from now, I could be long 7 stocks because something changed. You know what I mean? So, you have to be always evaluating what's going on. And naturally, that stuff I do in the subscription type letters, to keep people apprised on a day-to-day exactly what I'm doing. But when I get to with you guys, I normally don't like to hold back, and I share with you what I'm thinking. But even then, you still have to know what to take, when to play it, how to play it, how long to hold it. There's a lot of stuff that goes into making money besides just saying, G, be bullish, G, be bearish. A lot of people get bullish or bearish right, but they don't end up making money because they get bad entries on stuff. It's like that's what I started to say was, when I drew this thing, the novice, you know, the, it's funny how comments go full circle. Like you come to the market, you hear something, oh, that's really a smart comment. Don't try to get the top. Don't try to get the top. Only idiots go for the top, right? Wait until you're clear that you're at the top and then start shorting, right? Well, that's not really good comment. I know it's kind of funny. It's like a lot of things when you learn them. Does this make sense to everyone? Like you learn something and then you get taught something smarter, but then you realize that this smarter thing is not really smarter. It's stupider. That smarter person teaching that isn't really the expert. It's like, so a lot of the things you learn that you think are smart, all of a sudden you find out I call it going full circle, and you find out, you know what, that's not that smart anymore. And I find most of the things in trading are that way. A lot of the things that you learn, they sound really like smart when you learn them, but you find out, that's not such a good thing. Like everything I've talked about before, like, tight stops are smart. No, they're not smart. They're stupid. So it's the same thing that there's this thing out there, you can't find the top. Yeah, you can. My whole day trading strategy, period. Day trading, back to day trading, is find the bottom and let it go all day. Find the top, let it go all day. It's what you do. Well, be the tail is a little different takeoff of that, but I mean, when you're being the tail, yeah, you're trying to find the top or bottom. It's a more neat way to do it. But I mean, even if you're not doing that, if you're just saying you short, the problem is that sometimes, guys, when you're especially when you're trying to short, is that here's what happens sometimes. Bam, right? Anybody ever been there for that? Anybody ever been there? Thinking, okay, I want to get short up in here for some reason, and you're saying, let me get some confirmation, and then boom, that's where you are the next day, or the next week, or whatever, and you're just sitting there like a deer in the headlights, right? And then what do? Then you start chasing these entries, right? Bob, you been there? Who else has been there with this? Give me some backup here. Who knows exactly what I'm talking about? Especially on the short side, right? And then you start going after this crap, and then guess what happens? Your retracement comes. You stop out of everything, and you go, what the heck's going on? I wanted to be short. I got short. I'm stopping out of everything. You feel like an idiot. So again, we have to be smarter than that. That's why trading's not all that easy. It's not hard, but it's not all that easy. It's not just a matter of, oh, gee, wait till the whole world knows that we're going lower and then start going lower. Well, if the whole world knows already, guess what? The whole world's already short, and the next thing that's going to happen is you're going to rally back some. So we got to be smart enough to say, you know what? That's the top. Let me make money on this move down, and then I'll decide what to do, right? Or let me be. And the problem is, the other thing to say is, well, I'll just have the patience to wait for this retracement. But you know what? You don't always get it. Sometimes you just drop and you drop and you drop, and it's over, and there's nothing left to do. So I'm of the philosophy that you have to be smart enough to kind of be in, have some skin in the game as you start dropping and have some profit building up so that you have a little cushion everywhere. So again, maybe that's part style, maybe it's part me, but I've seen so many people fail trying to do it the other way, trying to be smart and trying to be too cautious. Trading and investing is a balancing act between aggressiveness and cautiousness. If you're too cautious, you will lose money as fast as if you're too aggressive. It's the balancing act. You have to know where to balance it. All right, let me pull up the camera. And I want to show you something. I talked about this conflict between the daily chart and the long-term pattern. Generally intraday, your day trading pattern is your day trading pattern. We don't worry about it too much. But it is influenced, of course, by where you are in the daily chart as well. It's only common sense, I think. And it has been tricky on some days because you don't have the ability to really anticipate some of this stuff intraday. In other words, you're not going to be able to see the letter's kind of tall. It's like a letter, legal size thing, at least. So I'll have to show it to you in pieces here. But where you get a big advantage in any time frame is when you know something's going to reverse and to be the second one in the door, like I always say. And when you don't know that area, when you have to guess at that area, you can't be as precise, and it makes it more difficult. Ronald, isn't that what you said? After trying to marry what you said about just about finding the top or bottom and letting it run all day isn't what you said after that. Counter this. My goal, my style, my goal day trading, Jerry, is on most things, not always, but most of the time, to try and kind of find that higher low for the day and let it run. Now, what I said after that was that your ability to do that with precision is going to be based a lot on how all the time frames coordinate. When you have everything come together, in other words, the daily chart, weekly chart, intraday chart are all pointing the same way, you can get more precise judging areas. When you have a conflict going on, which is what I feel we have, a weekly chart that's not going to go much higher, a daily chart that's in a very strong uptrend, and let's say you have an intraday chart that's in a downtrend like now, this conflict makes it more difficult to see the exact areas that could potentially be highs or lows for the day, at least in the market. I look for an individual stock still, but like today, if you shorted late morning today, the market came all the way back, right? Today's a good example, Jerry, right? Today's a good example. Does that make sense, what I just said, Jerry? Did I answer your question? I think I answered your question. Yeah, okay. So you like that precision. But look at today, guys, right? I mean, I'm not going to pull up the chart from today. Look at your own chart. But today's a great example of that, right? So I shorted that rally, and luckily I stayed clean today. But we came all the way back and took out the high going into the close in what is a bearish intraday pattern. So in other words, very bearish intraday, and you would never normally expect. What happened today after 2 o'clock was exceptional. Why did it happen? Because the daily chart is so bullish right now. So you have this conflict going on. That's what makes it more difficult. Because you have, this isn't just, it's not a technical, it's not just a chart thing. When I talk about time frames, it's not like I'm even being technical. It's very simple. There's people that invest money on a day-to-day basis. There's funds that invest money on a week-to-week basis. There's people that day trade during the day, and these numbers are not always pointing in the same direction. So naturally, the bigger money is coming in on bigger time frames, right? Big funds don't come in and buy millions of dollars of stock intraday to day trade. Then that's not what happens typically. Typically, those bigger moves are coming from bigger time frames, and they are the bigger waves that drown out the ripples sometimes of the day trader. But anyways, but just kind of take a look. So this is the, let me just show you from top to bottom here. This is the top half of the letter. You get a link how to use the letter. I suggest if you ever are using the letter, make sure you read this. It goes over a lot of good stuff. Like for example, down here, if you notice on the chart, can you see my arrow? Let me look at my other screen here. There we go. All right, you can see, can you guys see my arrow? I'm pointing at that red line. I know that's not huge. You can see the arrow? Okay, all right. Notice when I do this, like for example, when you look at a chart that I have, this is the top half of the letter, and then if you keep scrolling down, it goes down. There's another chart. There's a market comments. Let me show you the whole letter. So here's the whole letter. Boom. That's the end of it down here. There's a little article at the bottom. Above the article are daily watch lists and long-term watch lists. Above that is the econ of the earnings for the day. And then above that is the market comments section where there's two market charts, a daily chart, an intraday chart, market comments. And then above that are the intraday, midterm, and long-term outlook indicators, bullish, bearish, etc. I'll talk about those in a second. Then some opening comments up here. And then up here is a click how to use this letter. Well, I think it's important to understand it because like even here on the chart, these lines mean different things. Notice that there's three types of lines. There's a solid line, red or green. There's a dotted line, red or green. And then there's a wide, fluffy line, red or green. And they all mean different things. A red, and by the way, this letter here we backed up to June 21st, as you can see. So this is back, a month, few weeks, whatever, a month. So a red line means that this is a resistance area that I expect to hold, a fairly precise area. Okay, uh, a wide line means that it is a valid, green would be support. It's a valid support area, but it's a wide area. We can't predict exactly where it's going to be. We wait for the event to happen in that area. And then if you see a dotted line, let me see if I have a dotted line. Just skip ahead here a few days and see if I can find a dotted line. We haven't had anything to change for a while. Yeah, no dotted lines. Well, when I put a dotted line, it means that it is, if it's a green dotted line, it means it's support, but support that I expect to break. In other words, it's not support you would play long. It's support that when it breaks, you would play short. Does that make sense, everyone? So in other words, in a downtrending pattern, there may be an area under which I want to short. It would have a green dotted line, meaning, yeah, it's kind of support, but it's supposed to break. Does that make sense? So if you don't know all that and you just glance at the chart, you'll be confused because they all mean different things. But what I want to kind of show you real quick here is I'm not going to run through too much stuff here. Again, Saturday we can entertain some more questions. But I put in here the prior day's accuracy. And it says right there, even if subjective. And this is me just kind of going back and saying, okay, typically I give a play, which is what I call a soft play, because this letter comes out at 8 to 8:30 in the morning, an hour before the market opens, and I'm giving out plays for the day. So there is no chart yet. It's not like we're talking about looking at a prior daily chart and going under. So it's an intraday concept. So a lot of times these are kind of what I call softer calls. In other words, short the rally on the sell side if this stays under this number is a typical call. And it's fairly gradable, in terms of did the concept work, but it's not something that that is trackable. It's not like I can say, well, here's the percentage of times it was right. So I just have kind of a subjective thing here. And I put like two numbers. There's the comments in general that you see here, and then there's the actual play. Because sometimes the play doesn't trigger or it doesn't happen, but yet the comments were right on. Want to be short today, get short, get short under this area. Well, sometimes by the time the market opens, the market, gapped under that area or did this or did that. So the play isn't really crystal clear correct. The concept was correct, but you'd have to find your own way to get in. I'm not sure that makes sense or not. So what I just wanted you to see is, play accuracy a 10, but the actual play didn't trigger that day. Whoops, I'm sorry. The next, let me hang on. I just botched that up. I'm just going to skip forward a day at a time and just look at this area in here because you can see there have just been a lot of days where the actual concept of the play just didn't form because things have been so kind of sloppy intraday. It doesn't mean that it's not good day trading. It just means this letter coming out an hour before the market opens, even though the comments are almost always good. There's only one day in here you'll see I'm pretty humble about if I'm wrong. I tell you I'm wrong. But so 10 on market comments, NA for play. There was no play. The next day, comments were perfect, but no play triggered. We had a super narrow day. Now keep in mind, sometimes one of the great comments is it's going to be a nothing day. Don't overplay it. Don't do too much. It's going to be a narrow day. And that's what it was this day. I said it's going to be a narrow nothing day. You can see it was a narrow nothing day. And the play didn't trigger because we never went above or below whatever areas we were supposed to enter. So great comments, but there was nothing to do basically. And naturally, as a day trader, you may find your own things to do, but in terms of market guidance, market bias, there was nothing specific going on that day. Perfect comments. But no play was even given that day because I said it's going to be a narrow inside day, and it was. You can't play that very well. Accuracy 10, comments perfect. And here's a case where the entry I gave was a perfect concept, but it went a few pennies beyond where I said the limit was. In other words, I say, like, for example, short something under 185.20, and the stock run and the market runs a dollar and a half, and then it goes 10 cents over. Well, technically, it went beyond the number. As a trader sitting there today, you may say, well, so what? So the concept was perfect, but it went just a skosh beyond the number. So I have to say, well, the play didn't really trigger, but it was a perfect concept. If you chose to play it, great. If not, that's up to you. Point being, comments perfect, no play. Comments. Here we end, and this happens sometimes too. We end up gapping up way beyond what I was looking at the time I gave the letter out. So the comments for the play were just no longer applicable because we end up gapping to another universe. Excellent comments, no play. My point is, it's unusual that there are this many days where a play didn't trigger because we just have so many. And through here you can see 3 narrow days in a row. Well, you know what? Not doing anything is smart. In other words, I specifically say you don't go long when you go over the prior day. You wait for this or that, and it keeps you safe because I know not to be going long there. Here we have a 10 home run, period. Home run. This is to short this gap up this day. Home run, period. Perfect play, perfect entry. Congratulations if you did it. Great. And sometimes there's a play either way. If we drop to here, you can be long. If we rally to here first, you can be short. Here, the short play didn't trigger. The long play did. It made some money. Nice job. Here, no play given. Perfect comments, but again the play given was just a hair off from officially triggering or being official. Here, tough on myself. No, the play didn't trigger. That's good. And by the way, I was way off this day. I thought this day was a short. You can see right here we gap down to here, if you can see where I'm pointing. And I thought we were lower. The play I gave never triggered because, again, I gave a smart play, and even playing it that day, I did kind of the same thing. Didn't get too short because we didn't have a confirmation, but the play didn't trigger. But nevertheless, I acknowledge my comments were to be bearish, and we rallied the whole day. This is a surprise to me. I was wrong. I had it wrong. Bad comments, no play, at least no play trigger. That's a good thing. The worst thing is if you get caught playing it the wrong way. At least here, surprise move, didn't play. And here, no play. And I think we're at the end here. And here's like yesterday or whatever. Play worked perfect. But it came up just a hair short of the number. Great comments, no play. So let me address one other thing here. And it's this part up here on the outlooks. This long-term outlook has been max bullish for me for 10 years. Now, you have to understand what these different ones mean. This midterm is a big picture. This midterm is the next several days to several weeks, possibly even months. And you could say, Paul, how can you have a bearish midterm outlook and still a bullish long-term outlook? Well, it's fairly simple. In other words, if this is like your weekly chart or whatever, and we've done this, and we're way up here, what I'm saying is we could do this for a year, right? And I'm looking at this as being a drop of 3 months. Do you follow what I'm saying? So if we're up here, that's a bearish midterm picture. We're going to drop for months. But the next question out is, well, okay, I'm a long-term trader. I just want to hang on to stuff for years. Are we at an all-time high? No, I don't think we're at an all-time high. Do you follow what I'm saying? So you have to take these in stride. Now, I've never even considered for 10 years changing the long-term outlook right here. I said back in May, if we, instead of falling in May, if we would have popped higher, it's very likely I would have called that as being the top. And similar now, if for some reason, instead of rolling over, if I do get fooled, which I don't think will happen, but if I do get fooled and we pop really higher for the rest of the summer, that could form like the top type of thing. Now we're a long ways from that happening, so I still have it as bullish, and there's no reason that's changing yet. But if we form like a climactic type top, it is something that's going to be a huge, huge major top, the likes of which you've never seen, like one from which we're not going to come back to for a long, long time. You asked about gold. Well, just do gold on Saturday, would you? Whoever asked me about gold. My first answer on gold is look at a monthly chart, not a daily chart. It's in a trading range. It's still a bearish picture, and gold will never be back at the old highs, never. What else on here? So market letter. That's all I'm going to go over. I think I've gone over everything. Questions? I got you bored here the last 20 minutes probably, but if you're not able to make it, Gordon, you can always email me and I'll forward you something I sent to somebody else, a little explanation of my thinking on that. But the big part of it is serious. Pull up a monthly chart, and that technically that says a lot of it. And also, just something we can talk about Saturday if you want. But I'm in one sense I'm old school, but on the other sense I'm not. I mean, things are different. We're in a different world, folks. We're in a very different world, and you can't keep hanging on to old notions. I don't see today's world. I don't see any concept where, and this gets into more of a, it's a little technical, but it probably gets into more of a fundamental reasoning, which I don't like to even talk about. But there's no concept of gold being any kind of a store of wealth, of a unit of value, of anything. That's gone. I mean, you're living, you're living in the 80s, man. You got to get off that, in my view. Sure, it'll have a trading range. It'll bounce back and forth. You can be long for a few weeks if you want, but I'm just saying, you're talking about something to hang on to protect your wealth like they advertise on TV. Those days are long gone. It's just gone. It's just gone. You have to get over it. I mean, things are different, and I really firmly believe that, and I'll stand by that. Again, it may have bounces back and forth, but we can talk about that Saturday. Have you ever thought of consulting for the team? Consulting? I have seen that show. It's kind of a fun. I watched a couple of seasons. I haven't kept up on it though. I thought it was a fun show. I like the show. To be honest with you, I think Gary. Honestly, obviously you've watched the show. I think if billions is the only way that you can invest fundamentally. If you do what they do, which is of course is illegal, but I mean that is what fundamental investing is about today. If you can do that, great, do it. But of course, you need to probably have billions to be able to do that, right? Well, thank you, Gary. Boy, that's probably the best compliment I've seen on the screen in my life. Thanks. So, anyways, questions? Anything about today? Today was the DTS Market Letter review. I did not do a couple things I normally do because I've done them on prior ones. It gets a little boring. I want to run through. I did go a lot more talk about the market situation because where we are right now. Maybe I stole some thunder from Saturday, but we'll have plenty of stuff to kind of go over on Saturday. You guys have all the stuff to talk about. So you'll get an invite tonight. We'll get together Saturday for a little hour. I was surprised how much you guys liked that last time. It was the first time I did that actually last time. I think maybe Saturday morning is a good time for people to get together and chat about stuff, literally over some coffee. So, all right. Any questions? Any comments? And specifically about the letter or anything you felt I didn't cover properly about the letter. I did do some of that a little bit quicker today because I've covered it in detail on other times. Anything about the letter? Any other questions? Let's let them go to Saturday if you're going to be here. We're good? Good, good, good. All right. All right. Thanks, guys. If you're in the room, I'll see you tomorrow. If not, we'll see you on Saturday or whenever I see you next. Have a great evening.